Welcome to StockOdds. This is another StockOdds podcast for you. Odds and Ends with Rob Friesen and Dave Singh. Good evening, Rob. How are you?
Not too bad, thank you. Going to go for a hike after this here. I mean, it's not evening. This is afternoon. So we don't have the futures open yet to see what's going on. So we're kind of running blind here, Dave.
We're a little bit blind, but we're coming into a brand new month, the last 2 months of the year. This usually kicks off a lot of activity for the end of the year and also for the next 6 months, especially in the small caps. I've been checking out the Seasonality Almanac in StockOdds and just to see what we can expect for the first day tomorrow of the month. And just to confirm that, I mean, IWM is expected to do quite well tomorrow and for the month. For the month, it's expected to outperform the SPDR by 2%, right? 5% on the IWM and 3% on the SPDR. And also, we're coming into the Christmas season, so we can expect a lot from retail. So I want to get your thoughts on that as well. And we've had a big run in technology that's kind of exhausted. So there's some big themes here. That
okay, let's pause. Let's pause for a moment with the Russell, because I think it's really critical for our listeners in making some money in November, because historically it's performed so well from November even through till April of the following year. So there's a key number on the IWM that we need to get above. That was set on October the 26th. So you want to go back and look at your chart there and look at what the IWM has done as of the 26th. And if we can, launch above that, then we are clear sailing for going and testing the high that we had set back in March, I think. Was kind of when it rolled over and had been in a channel ever since. So we still haven't broken out of this long channel that we've had all year. But if we can clear the October 26th, there should be a lot of follow through, getting us back towards that high, because it'll be 5-6 months in coming here, right? So you can see a lot of anticipation, especially on the back of what normally happens in November. So this is going to be very interesting how this all kind of comes together. Okay.
Good. Yeah, that level's about 230 on the IWM, so we're not very far from it. It'd be interesting to see if we can break through that. Great. How about retail? I mean, we're starting the Christmas shopping season has started back in August. You go to a Costco, but this is typically the time that retail stocks outperform. I was watching the XRT. That's expected to do well this month too, kind of like the small caps. What are your thoughts on that?
Well, the problem with some of these ETFs is you have to boil down what's actually inside them as well. So if we take a look at, let's say, the top holdings in the XRT, that could give us some indication of what the merits to that breakout might be, kind of thing. Because we've also been in a little bit of a descending channel with that one, right? With the XRT itself. So I don't want to use it for a proxy or use it for a hedge unless I kind of understand more what's going on with it. So I'm just going to put this in here and remind myself of what is in it.
Well, I'm looking at the top 10 holdings. We've got Etsy, Buckle, Revolve, DoorDash, Boot Barn, CarMax, Carvana, Car Parts, American Eagle Outfitters, and Signet Jewelers. Some of these are mall location stores. 3 of them have to do with automotive, used cars. So it's a little mixed there.
Well, yeah, I mean, let's see, what is... Yeah, some of it's more probably been under pressure because of this, reopening trade versus stay at home, right? Like, as people are expected to get back out there, maybe some of those stocks that were so much in the lead as far as the stay-home economy just, pulled back and really hurt this performance. But yeah, I agree with you. It's definitely something to watch. And as far as that goes, year over year, we're making new highs on the things like Etsy and things like that. So I mean, they're in the top 10. Might be, some leadership there.
That's good.
I have concern here about the FOMC, which is next week. So they're supposed to mention about this taper, which could start as early as November, 15 billion a month, which isn't a massive number, but that would continue until June of 2022. And so, this may be a case where the market shrugs that off and just continues to power up, going, well, we'll deal with midterm elections and next year we'll deal with that when it comes, kind of thing. Like, it just seems that they really want to press the upside on this market. And we're kind of facing, if you look at all of the indices together, whether NASDAQ, Dow Jones, SPY, Russell, you're kind of looking at right now, many of the indicators are favorable and potentially a melt up situation in November through December. So, this taper may not amount to anything, but, it's FOMC week coming up. And what typically happens is a bit of a pause, wait and see, usually a bit of a rally actually in front of the FOMC, maybe the day of, even in the morning before the announcement. And then we have seen some great follow through previously after the announcement, but this is the one that's supposed to be like, we're listening for something to do with this taper schedule, right? So that's why it's going to be kind of a bit tricky. We do start off the first trading day of the month is also the first of the month, and that starts on a Monday. So there's potentially this nice turn of the month effect. We have on our seasonality calendar a bullish, sentiment for the first trading day of the month. Do you see anything that's flashing warning that we may have a down cycle? I know that like the futures aren't open yet and things like that, but we finished on such a strong note. It almost seems that people were trying to get ahead of, and we didn't have that sort of discount. Even the NASDAQ popped back on Friday, right? So, I mean, it's lagging a little bit behind some of the other ones at the moment, but, it did finish on a relatively good note, and we're looking, all the signs seem to be follow through, and up we go. Any arguments to that?
No, and even things like Tesla as an indicator of risk appetite. I mean, that's had a huge rally in the past few days, like a last 3-day streak as well. I looked at the streak vault that you have in StockOdds, and I typed in Tesla there. It's had a 3-day streak. I wanted to see what it's expected to do to continue to do well and continue to go up. Whereas the NASDAQ, it's expected to at least be flat or slightly up. So there's something to this follow through from, I think bigger than that is the turn of the month effect. That's really going to help push things through. And what's popping up here is sectors like biotech, XBI, IBB. These are expected to do well on the first day of November. Do you have any comments on healthcare in terms of the last bit of the year, month of November? I mean, any thoughts on that?
Well, I mean, the biotechs and healthcare generally do have a reasonable showing in like November, December. It's there's a lot of things that fire on all cylinders just because the breadth of the market has usually been so good. So, let's say you are having trouble finding any shorts to sort of offset things with. What would you tend to do? if you could just find good longs, but you didn't have a lot of shorts? How would you sort of protect yourself in case we had a surprise?
Mm-hmm.
Any thoughts?
I mean, I think it'd be safe to short some of the big cap, especially with this undercurrent of small cap outperformance.
So how would you focus on identifying the larger market cap stocks that really don't have as much growth potential, as much upside as some of the smaller caps, some of the real growth names? Like, how would you identify? What would you screen for to find these boring, mature things?
Yeah, maybe PEG ratio or PE. Some of the lower PE or lower PEG ratioed stocks. That could be one source.
PEG is forward earnings of 5-year divided by growth, right?
Yeah, price to earnings growth. That could be one way to identify some, but still in the large cap and mega cap arena. And I think really just the theme is the stuff that everyone wants to own and they're willing to pay a premium for at the open or just at the beginning of the month. They're going to want to buy Apple. They want to own Microsoft and Google. These are as safe a hedge to short, I think, as any.
So how much are the inflation hedges in placed right now? Like, you think the focus is still going to be inflation? We don't have any arguments yet for oil to really retrace. We still got a bottleneck there. We've still got bottlenecks all across the consumer front and the commercial front trying to get things. We still have the log jam of containers and lack of employees, lack of trucking, things like that. So you think the inflation hedges are still in play here?
I think they're still in play, but you have people like Janet Yellen still insisting that we're going to go back to 2% inflation rate, that this is transitory. I know Powell said the same thing, and somehow either that they're talking in their book or they just don't see it, but they really do feel like this is transitory. And technology, in general,
the consumer is going to feel, what's in front of them right now, right? It's just the same problem you have in trading in general. When something goes up, you think it's going to continue up forever. When it goes down, you think it's going to fall to zero. That's the sentiment that comes into play. It's very hard. It's very different than consumer mentality of going shopping and seeing a red tag sale. Mm-hmm. Because when you want an item and you have a red tag sale, you're going to be like, I'm all over it. I want that. And it's different because you're buying it, either with cash or credit, but you're not it doesn't matter if it goes to zero, you want the item. When it comes to the stock market, it's completely different. When something is going down and the fear element would come in and say it's going to go to zero. Mm-hmm. And it's really hard to get that discount mentality in place of like, hey, this is really attractive price and have the forward looking that this thing can cycle back up. Plus, if you're using leverage, it even gets more difficult, right? To be in there buying discount, right? Or selling premium for that matter, right?
Yeah. But I'm taking a look here at these very large cap stocks, Microsoft, Google, Tesla, and Visa, right? And the fact that they're doing so well with cloud and revenue and making money and growing their businesses, and these are technology-derived businesses, these are actually deflationary a little bit longer term, maybe 6 months out, 1 year out. And the fact that they're doing so well, this could be a countercurrent to inflation. And like, look at Visa, right? That the fact that you can have things like Square and low-cost ways of competition with Visa, these are all deflationary. So maybe people like Janet Yellen are correct that this is transitory and it's not going to go forever.
There's a number of things that have to be brought into the equation when you're talking inflation, which is the velocity of the money and so on. And at this moment, we still haven't seen a massive rise in velocity. So in that sense, would agree with some parties that have talked about that. But the problem is that technology is really the argument for a decrease of expenses, right? A decrease of the cost of goods as technology improves. Well, with this massive bottleneck in chips, which every industry, almost every technology out there is using chips. And the big disruptor that could come in, which is not really a black swan because people are talking about it and kind of thinking about what might happen, and that is if China went and moved on Taiwan. You've got Taiwan Semiconductor is the largest foundry in the world as far as producing these chips. So that could cause that disruption of spiking inflation, even higher, and could be totally disruptive to technologies in general, right? Because like I said, most industries rely on technology of some sort, and chips are a big part of that.
Correct.
So that's why this thing is probably going to continue to move higher, sort of adjusting for inflation, but also looking forward to the technology impact. And I think both parties can be right at the end of the day. The trouble is when, right? That's always the thing. Have you ever taken a trade where you were right, but you were early, so you were wrong? You were wrong, and then you were right? Have you ever done that? I think we all have, right?
When is just as important as how much and
right. Timing is. I had this one trader that was like, I called him 2 days early. So everything he did, it was right, but he was 2 days early on it. And so he got run over. And it was just incredible. It was like persistent. 2 days early on everything. Because he was going after the volatility and sort of the reversals that he was expecting, but he was just early on it. So, good note to self, and that is you can have the right idea, and you can just be out of sync on timing completely. I guess that goes back to The Big Short too, right? The right idea, very early. But I think so. Keep an eye for our audience there. Keep an eye on the crypto. I think that some of that argument is hedging against inflation. I think that there's still so much of a risk-on mentality. Like we've come out of, even though you're seeing a taper talk, even though you're seeing a reduction of stimulus money and all the other different programs, the true effect of all of those, all of that quantitative printing, all that money on every aspect that's gone on, has that blown completely through, right? I don't think so. I think it's the same argument as the bottlenecks that have occurred now because of the lockdown. I think that none of that, or very, very little of it, has actually blown through yet, right? So what is going to happen yet before this is over? We could see a big melt up in the market. We could see a big repositioning of assets. As the longer this goes, the more people think it's going to be here forever. And, I think it's kind of like that chart on lumber. The lumber went straight up and straight back down to where it came from. But if you were caught on either side of that, either the seller on the way up or the buyer on the way down, you got run over. I mean, it was that steep on both sides. So that's probably what's going to happen. The market will be very, very steep for a long period of time. And then when it rolls over, everybody will have been taught how to continuously buy dips. And as it pulls back, they'll get run over. So they'll need to learn to hedge or learn to work the short side for a change. So, all right. Good. Well, anything else on the specific groups? You talked about, Russell, any other commodities or things that you plugged in for seasonality?
No, it just looks like some of the biotech might be good. Oil should be strong still. XLI and the chips. Those are some of the ones that should be good for tomorrow. Okay. And
well, just watch out for specific news stock news sometimes. Like, for example, American Airlines, another one of the airlines that canceled 1,500 flights this weekend. We've got the EU and the US have agreed to lift some steel tariffs. Not sure how we had earnings on U.S. Steel on Friday, was it? And popped up. But I think that just be careful these steel stocks. I'm not sure which way they're going to go based on this news. So I think it favors importation for the U.S. rather than exportation. So just keep that in mind. So just you can always, if you're using a statistical approach, you can always take out the news items if you so choose, right? And it doesn't mean you won't look back and go, oh, nothing would have happened if I'd have left it in it, or I would have made money if I'd have left it in it. That's fine, but everyone has to decide whether you're trading all symbols regardless, or whether you account for that and you want more the business as usual sort of boring, not specific news. Okay, so each person has to decide that for themselves. I think at the end of the day, I prefer to be in the boring is beautiful category rather than have to, outthink and outsmart the news, right? But you can make your choice. Okay.
All good.
All right.
Good thoughts.
Well, thanks for a good session here, and we'll catch you later, Gator.
Bye.